Hello everybody, this is Matador from freetradingvideos.com. It is June the 3rd, nice Thursday, and yesterday we had a good sized rally after a good stall at the 109 mark. Late day rally, not the easiest thing to get into, but this higher swing low, then a breakout of the 200 MA that we were watching on this 15-minute chart of the S&P 500 ETF, the SPY, was also breaking out of the symmetrical triangle that we saw yesterday. The apex of that, loosely drawn, I'll tell you why I'm doing this in a minute, right through here is a great spot to look for an area of support here. So I remove this and drop that line. So a test of that, and a test of that again and again, and finally a break. And the only thing to fight then is the 200 MA through that and these swing highs back here. Both of which were taken out quite nicely as people are thinking that the U.S. economy is back on track, and we're now trying to build on that with an up gap this morning and a bit of a gap fill. So kind of cool to see all that action here pre-market, albeit on lower volume. It's not quite as low as sometimes pre-market. So I know it's hard to see this, but you can kind of check it out right there. On a 3-minute chart, let me just change time frames. That's kind of what it looks like, a little more scrunched up, but you get the idea that this move up today, this gap up, and a pullback to support. Now we're chopping around, at least holding the 110 mark, which is a far cry from the 109 area we were at yesterday, and the 111 test. So if we can hold up here in this venue, that would be fantastic. On a higher time frame, you can see where that is. That's a swing high all the way back here. Right, so it makes sense that we would stall there, even pre-market gap up into that. Not a lot of people want to buy long into that, but a break of 111. You have to scrunch the chart up to find the next logical spot of resistance, and it's the swing high and failure here pre-market at 112. That's an excellent target for us to watch out for today in context with anything that we're trading. And support-wise, of course, we've got the 110 mark. Wherever the 200 MA is at the time we pull back on the 60-minute chart here, 109, the symmetrical triangle and pullback just a little bit above 108, even though the formal support is right here. Don't want to force a stock to do something it can't. And then all the way down here at 107.20/107. So good stuff. That's just support and resistances. On a daily chart, you can see where we've come from. Very, very nice rally, but again, look what we're about to jump up into. If we opened right now, remember where we're trading, we're at 110.72 right now pre-market. 110.72 on this chart. If I grab this guy, he's right through here. And what does that line up with? Almost exactly, the 200 MA on a daily chart. So that's nothing to sneeze at. Need to pay very, very close attention to this area right here as we trade up into that, and these swing highs, and this unfilled gap. I could go on and on about the resistance right here. It doesn't mean we can't break out of it, but just be careful how you trade into all these numbers. And if you're going to trade intraday, look for taking some profits potentially around the 111 mark, which would then be a test of that. Even though we do have a higher swing low through here. So good stuff. Those are the things I would be watching out for and paying attention to. Make sure you have the trends in your camp and the VIX as well. And hope you have a great trading day. Talk to you soon, everybody.